You're listening to the Leadway Wealth Builders Podcast, episode 147, where today I am interviewing Ian Smith, who works at Premier Lending, has a couple rentals, and we break down what the Charlotte market is and how new homeowners need to be able to get into the game today to be able to start building wealth, and why today is the best time to start investing. So if you haven't listened to this podcast before, my name is Chris Rickenbaugh, and I'm a real estate investor here in Charlotte, North Carolina, and I am documenting my journey in real estate and business and also talking a little bit about travel hacking and personal finance. You can find me on Instagram and TikTok, where I post daily about what I'm doing, what I'm learning, and you can find me on at chris.rickenbaugh. So that's chris.rickenbach. And if you're listening to this podcast, thank you and stay right where you are. But if you need another source to listen to, go on Spotify, Apple Podcast, Podbean, and YouTube, where you can also listen to this podcast. So without further ado, let's hop into the episode. All right, Ian Smith, welcome to the Leadway Wealth Builders Podcast. How are you doing today?
I'm good, man. Appreciate being here.
Yeah, absolutely. I appreciate you willing to hop on. I know you guys are crazy busy, especially being in the Charlotte market.
Yeah.
Lots of homes moving, and we're going to be able to talk about that a little bit. But I wanted to get into a little bit of your story. I know you have a couple rental properties that we can discuss, and I just want to get to know you a little bit better. So, who are you, and what do you do?
Yeah, the who are you question is always interesting. But I am a local mortgage loan officer here in Charlotte. I work for a really cool mortgage company called Premier Lending under Ferris Farage here in the Ballantyne Corporate Park. I have been in mortgages since 2015, so I'm a pretty seasoned vet at this point, and really enjoying being in this space, man. It's really exciting.
Yeah, you guys are pretty busy right now with how busy the Charlotte market is.
Yeah, we've been very fortunate. We've done a lot of work over the years to build out a good client base, and our clients have had really good experiences with us. So they've referred their friends and family, and we've stayed busy, during this interesting time, with that, and of course, Charlotte being very helpful in keeping that busy with all the movement here from other places.
Cool, cool. And we can dive into that here in a little bit further about like first time homeowners, mortgages, but I wanted to talk a little bit about what you do in investing. So, where are you currently at in your investing journey?
Yeah, so I have a couple properties in my portfolio right now. They're more of the higher dollar properties. So what I did was I bought primary residences and converted into rentals. So right now my portfolio is about 1.3 to 1.4 in total, and they're all cash flowing and doing really well.
Perfect. Perfect. Are they all within the Charlotte market here?
Yeah, so I've been pretty localized, not for any specific reason, just more so, I guess, because I decided to convert primary into rental. And that was overall the strategy that I started with. And so that's why they're here.
Yeah, that's interesting because that's a lot of what my whole goal was. So I bought this house back in the end of 2022, but it's going to work really well as a medium term rental. And the goal was to, buy one each year, and then it end up turning it into a rental. But life has different plans for us. So now we're an entrepreneur flipping houses. So it's cool to see somebody who has done that stack method and, just kind of kept building the rentals one on top of the other. But, what do you see long term with that plan? Do you see holding them into rentals, getting into or using the equity to get into something bigger like apartments?
Yeah, so my long-term goals are still a little bit undefined. I think about that quite a lot. My medium goal is to continue working with what I've got. I was very fortunate on timing for my very first purchase to be at the beginning of 2020. So not only did I get a good deal because the developer was worried about COVID killing his business, and wanting to get out as quickly as possible. But I also got a good interest rate, in that same year. So, that property's done really well for me cash flow wise. But the benefit of where I selected was that is a gentrifying and developing area. And I know that the G word is a very hot topic debate in this business, but when it comes to it, as far as investing goes, these are good neighborhoods to get into because you see quite the swing of value, especially if you get in early. And for me, the strong benefit of that purchase has been that I've seen that growth and appreciation, and that's really helping, fuel me keeping that property in the medium term instead of just selling it now and moving into something different.
Yeah, that definitely makes sense. And then you brought up like the Charlotte market, and that's the gentrified word is really hot. And
Yeah.
just for you to under explain like the gentrified Charlotte market, for me, I see that as, you know, you're going down the road and some houses might look rough, but there's also $1 million house and there's brand
Yeah.
new renovated houses. So it's like one's renovated, one's not. Is that what you're kind of speaking of as gentrified, to where it's slowly starting to, you know, get renovated, build new? Is that what you mean?
Yeah, so the neighborhood that I bought in originally, it was a neighborhood that we were the first development in the neighborhood. There was a lot of Habitat for Humanity homes and just older homes from back in the day. And so, the neighborhood was more or less the original neighborhood that was there. And we were kind of the first foray into new development. And since, we purchased, there have been quite a lot of flips on those existing properties and then tear downs with massive builds on top of it. And all that's intermingled with the ones that haven't sold and are still there. So yeah, that would be a good description of it.
Yeah, and that perfectly answers exactly what we're seeing in the Charlotte market. In the business flipping houses, that's exactly what we're seeing. Like one of the houses I have renovating right now, the guy owns on each side of me. He said, he's like, if you're interested in, selling the house to me, that's better for me because I'm going to tear it down and build, 3, 4 townhomes. But if you
Yeah.
keep it, then I'm just going to tear down those houses and build $1 million home. So that's exactly what you're saying, and that's when I'm trying to explain the Charlotte market to people. I'm like, it's tough because you're competing with you not just renovators, but you're also competing with the new builds, and then you're also trying to find something that's affordable for new homeowners. So what are these new homeowners, what's some of the strategies that they're having to use to get into their first home in a competitive market like this?
So, I mean, it depends on the type of new homeowner you want to be. If you want to be for primary residence, or investor, there's definitely different avenues. But, I'm seeing the primary homeowners, I'm seeing them take advantage of first time home buyer benefits. And for the investors, I'm seeing them take advantage of unique loan products such as DSCR or other similar products that allow for them maybe to do fix and flip or what have you, to be a bit more creative with their purchase and get in where they need to be and do what they need to do to make their money.
So what can you do on the mortgage side that can help those new homeowners? You mentioned DSCR. Could you break that down for us really quick?
Yeah, so for investors that are looking to purchase, one of the more common products that I've been originating over the last 12, 24 months has been a DSCR loan, which stands for debt service coverage ratio. These loans are big buzzwords right now because they provide a really simple means for people to acquire an investment property. So, in traditional mortgage, qualification requires us to look directly at you and all of your finances and every little intricate detail about your employment history, address history, et cetera, et cetera. What these DSCR loans do is kind of they're more flexible in how they qualify, and so we're looking at you to an extent, but we're more so looking at the property's ability to cash flow as the form of qualification. So, that's opened up a lot of avenues for investors who may not have the personal finances to balance multiple mortgages to acquire investment properties due to the fact that we see that it can cash flow based on the market data out there. And we've seen a huge influx of people wanting to get that product.
Yeah, I haven't done that specifically. I know I've looked at it for a couple of my properties, but it
Yeah.
seems like um, if you're in that specific niche of keeping the rentals, the DSCR is the way to go because you can purchase it with the hard money and then you can refi out with the DSCR based on the
Yeah.
rental. And that's
Yeah.
I haven't done that yet. My goal has just been flipping. So it's interesting to see. It's like, okay, what's working for the other investors out there? When I get to that point where I can start holding the rentals, it's like, yeah, how can we leverage this as much as possible, be able to keep rentals, long-term wealth, and so on and so on. But is that something you're looking to do in your own portfolio too, a little bit further?
So, yes, I mean, that's a great question. So, I will say the DSCR product is really good and it provides a lot of benefits, especially for groups of investors. Um, the downside of the DSCR is you pay a premium for the simplicity and for the type of qualification that it is. So the interest rate's a little bit on the higher side. So me personally, I have no issues doing a more traditional investment property purchase through Fannie Mae, Freddie Mac. My finances support that type of purchase, and so
Mhm.
for me, I'm not opposed to it because I get rate savings. And my goal is in my type of investing is more so to hold, right? So I'm going to be looking at cash flow, and cash flow is important. The rate becomes very important for that. So for me, I'm a little bit of a different strategy, but if I continue to acquire and buy enough property, I will tap out of my personal finances and may need to deviate to that DSCR loan. And like I said, that's where that comes in so handy. We've got groups of investors that want to buy, and it can get very messy when you're doing full documentation qualification. So the DSCR is great for them, and for solo investors like myself that don't really work with partners, eventually you're going to tap out. You're not going to have the finances to support, and so that's where that product comes in handy, so you can continue purchasing.
Gotcha. That makes sense. This is a lot of, it's like you hear about it, you read in books, but actually listening to somebody who does this every day, it's a lot more like, oh, this actually makes sense. But
Yeah.
I did want to point on something is that you mentioned cash flow. So cash flow, for the investors, it's something to where if you didn't buy your property back before 2020, 2021, that's something that's really, really hard now.
Yeah.
And finding the cash flow, passive income versus active income. I'm taking the active income route. But for the passive income and working on cash flow, how are these investors finding the cash flow now?
Yeah, so I think this is where, and I've done podcasts in the past where I've talked about the importance of working with good real estate agents. There's a tremendous amount of value working with someone that knows where they are, they know their market, they know how to negotiate, because getting deals is very important for getting cash flow. Now, in addition to that, having good partnerships with accountants and things of that nature can also be very important, because I think a lot of people don't realize that sometimes you may not cash flow on a monthly basis, but you can cash flow on a tax basis. And so having that conversation with the CPA plus your agent about the numbers and getting those concretely figured out prior to making offers is very important to being able to continue to invest in this higher rate, higher cost market.
Yeah, you're talking about the short-term rental, the cost segregations. Is that what you're talking about on the tax savings part?
Well, sort of. I mean, even on long-term rents, you still have lots of tax write-offs that can offset some of your income, and so you're able to generate more tax refund for yourself, and have a lower tax liability. And this can be valuable, especially if you're a high income earner. Getting maybe out of a specific tax bracket by writing off or at least diminishing your income and getting more refund. You can kind of capture some of if you were taking a loss on a monthly basis, you can capture some of those losses just at the end of the tax year. So, it is it's more challenging than it used to be when things were cheaper, but
Hmm.
there's still very creative ways that people can get involved in purchasing property, having someone else pay their mortgage for them, and still quote unquote cash flow. And for me, my personal goals is when I'm buying, I'm looking for growth areas, so areas that are people are expanding to areas that I can see growth, where I can forecast that there will be home appreciation. So if someone's covering my mortgage more or less, even if I'm taking a slight loss on a monthly, but not on a tax basis, and I'm seeing appreciation, that's basically a free asset to me that I'm growing, right? And so there's tremendous value in that, and there's still long-term gains to be had, or at least medium term. So I think regardless of how expensive things are right now, there's still opportunity out there.
Gotcha. And now you're speaking from the mortgage side or the investor side of you
But
looking for long term?
Both. I mean,
Okay.
from the investor side, let's just speak to that since that's the topic point of this podcast. I mean,
Yeah.
again, if you can more or less cash flow on a property, even if it's a break even or a slight loss, and you can get, that back on your taxes to where it is a break even or it's a net positive, why not, right? Especially if you're in the right area where your property is going to be appreciating 3 to 7% per year. You think about that with the average cost of these homes these days. I mean, that's tens and tens of thousands of dollars that you're going to be able to accrue on your property throughout your ownership.
Yeah, that definitely makes sense. Personally, I love the long-term hold for the long term. But
Yeah,
you brought up taxes, and that's where I kind of go back and forth because I get hit with this all the time on, oh, you're flipping houses, what are you going to do on taxes? It's like, well, first off, if you don't make money, you don't have a tax problem. So you
right.
need to be able to make money. And then, when you're paying quite a few, like not like 10,000 in tax on a year, when you're paying way more than that, it's like, okay, now let's start to focus on the tax game. And that's where, I get a lot of backlash. So it's fun to hear someone who's a couple years down the road has the long-term rentals and has met with people who have those long-term rentals. Because I get hit with that question all the time. It's like, how could you not be holding on to these? It's like, well, I'm trying to make money first and
Yeah.
then focus on the wealth part. So, for these people trying to get into their first property, pivoting a little bit here, um, you know, you hear all the doomsday stuff on Instagram, all on Facebook, the world's ending. It's so hard to get into a home. Is now the perfect time to buy a home or is now the perfect time to wait?
Listen, if you look at historical home values, over the life of tracking that data here in the United States, I think home buying is a pretty safe bet. I think if you take the words of very respected investors such as Warren Buffett, you don't time the market. You buy this as something that you want to buy, right? There's a reason that people buy homes, right? And when we're talking investors versus primary, there's different goals there. You're buying it as a primary. Timing the market shouldn't matter. What should matter, and what I tell my clients who ask me this question, is can you afford the payments? Are you comfortable with the payments? And do you want a home? If you can check those three boxes, there's pretty simple boxes, then it's probably a good idea to buy a house because there's a lot of benefits tax wise, future appreciation wise, personal happiness. Like, I always tell clients, when I first bought my very first home, and I still have this feeling these days, or to this day. It was a really special moment when I got home late from work one night and the lights of my car like lit up the house as I was pulling into the drive. And like, I'm like, this is mine. I'm going home to my place. Like, it was a really cool feeling. And I've never gotten tired of that feeling, especially after, some very tired or, intense days, just having that peace of mind and going back to my place, right? And so for me, there's a lot of personal happiness that can be gained from having your own home. And to speak to the investors, there's a reason that you want to buy a house, right? As an investment, you're looking at some sort of goal that you've got, whether it's the fix and flip, whether it's long-term or medium-term plays or short-term rentals. There's so many different ways to get involved in home ownership, whether it's primary or investor side. And, if you have that feeling you want to do it, and there's a good why behind it and you can do it financially, there's a substantial benefit into doing it.
Yeah, that makes perfect sense. Buying a home, it's like you said, everything, I mean, this is a little bit general, but everything kind of keeps going up. So
Yeah.
for all the doomsday people, we're in a recession, my house value is going to go down. I had this conversation with somebody recently about they're like, well, what we're trying to pay off our property as fast as possible. That way we don't have any payments if a recession comes and, we just don't have any payments. So, tried to explain to them in a way is, say you pay off your property and it's worth 500,000. And let's say something drastic happens in the economy and it drops down to 250 and you're worried about your maybe $2,000 a month payment, but you also lost the value of $250,000 worth of equity. and now you're stuck in that position, can't sell, and you have to wait for the market to go back up. So where do you see, on the long-term rental side? That's an argument I have like in my brain and with other people. It's like, have you thought of this? And, for them, it's like a light bulb hits like, oh, I didn't think of that. With all those people having the equity in their homes, you know, what does that say if a recession hits? Because that's the big word right now. Is a recession coming? And, we're not predictors here. It's like who knows what's going to happen? Nobody could have predicted COVID, but how do you manage that in your head as having paid off houses, but and also playing the long game?
Yeah, so I think it's important to note that, of course, none of us have a crystal ball. So,
Right.
as much as this is financial advice, it's not financial advice. But, what I always tell clients that, are thinking doomsday is like, look, you can't predict the future. Here's what history has told us, right? Historical values have gone up X percentage based on individual markets over the last 60, 70 years. Over time, you compound that year over year. Yes, there's going to be bad years, but there's also many positive years, right? And there's been a few standouts that we've had to deal with in the most recent 20, 30 years time here. But it's very unlikely that you're going to be in an upside down position, at least in a city like Charlotte, right? Charlotte is a highly moved to city. You've got a lot of population growth. We're consistently in the top 5 in the country for places to move to. You have a lack of inventory. There's not a lot for sale. If there's not a lot for sale, there's a premium that's assigned to what is for sale because of scarcity, right? So there's a lot of benefits of being in our market. And then more so, I think it's just important for people to realize that recessions are actually not bad for homes as far as appreciation goes, historically speaking. I mean, obviously, we've got the big '08, which everyone likes to refer back to, where, we saw significant price home value declines across the country. But if you look at the local market specifically, Charlotte was one of the standouts. Like we did really well. We fared very, very, very good during that period of time. And again, for all the reasons I listed prior, there's certain MSAs, certain markets that may not be as an advantage position as we are. And so I always try to remind my clients that, we're not here to predict, we're here to say what makes sense based on today. Here's the historical data to suggest, again, can you afford it? Do you want it? And are you comfortable? If the answer to those things are yes, then let's buy a home, whether it's for you to live in or for its investment strategies. There's a substantial benefit in doing so.
Yeah, I think that's such a good way to wrap it up. And those 3 questions of do you want it? That's that personal choice, and then can you afford it? And then what do you see in the long-term value? I think those are 3 great questions because somebody even on the fence of buying their first home, because for somebody that's read the personal finance books, like I said, my this personal house was designed to be a rental. I just ended up being in it a little bit
Yeah.
longer than I thought, like bought it at a low price. And that's something that somebody else can do. You might not need to get the best deal on a house, try to get like 50 to 100 grand off, because that's going to be really hard to find because now you're battling with investors.
Yep.
But being able to sit on that and say, hey, within that next 3 to 5 years, you could easily go and buy another house and make this a rental based on where rents are at. And it sounds like you're kind of on the same page with where your houses were.
For sure.
Yeah. Yeah, I that's the biggest question. I get taxes, the active income part for me, that's just where I'm at in life. So being able to see somebody, it's like they have the financial stuff figured out, they're, piling up rentals, it's safe, and then they're able to meet with new people who are having those second thoughts. And it's like you answer that with those 3 questions. And I think that's the simplest and easiest way to think about it when you're a first time homeowner looking to buy a home in the first place. But I wanted to backtrack and go back to, the real reason and kind of end the podcast with, how did you start getting, or not how did you start getting invested in real estate, but what was that push to start, keeping those homes?
Yeah, so for me personally, the main driver in just getting involved in real estate as a whole is what I do for work. I felt like as a mortgage professional, I needed to eventually buy a home, so I could not only work with my clients to help them get homes, but also speak from experience. So around 2020, I felt like my finances were in a good enough spot where I could make that purchase happen in the way that I wanted to do it and the price point I wanted to be. And so, it was a big thing for me to get out of apartment living and get into something of my own. And so my strategy initially was no strategy. It was just to buy a home, right? And it's okay if you don't have it all figured out day one. For me, I didn't. I didn't know what my long-term goals were, but I knew I wanted something of my own and to be out of apartment living and to, be able to start generating long-term wealth for myself. And so that's how I got into it. And then, fast forward a couple of years, I decided I wanted some more space. And I felt like, the numbers checked out well enough on the current property that I would definitely want to make that a rental. It didn't make sense for me to sell, take the net proceeds and put it into the next home to have a lower payment. I'd rather have the higher payment on the new home and then be able to offset that with my rental plus generate, tax write-offs, right? So, for me, the journey wasn't thought out in the beginning. I just knew I wanted a home and then I kind of figured it out as I went. And for me, I rationalize that now as it's okay to not have the end in sight. We don't always see at the end of the rainbow what it's going to look like. But, if you make an excuse not to do something for every little thing that you see in the news or everything that you're thinking in your mind that could go wrong, you're never going to do it. So I kind of sent it and I'm really happy with where things have kind of ended up for my real estate journey.
Cool. Cool. I think that's just about the perfect way to wrap up. From where you're at now, you said you don't have that future exactly planned out yet, but where, last forecasting prediction, what are you seeing for the Charlotte market here within this next, 3 to 5 year span?
Yeah, so again, no crystal ball, but I really think that Charlotte's going to continue to see growth. I mean, there's more and more companies moving here, and with the return to work starting to become a thing again, I think you're going to start seeing people move back into the city who don't like the commutes that they end up having to deal with now that they've moved out. COVID was a big geolocation change for a lot of people. You saw a lot of movement from the cities to the suburbs or places in the rural areas that are surrounding, within striking distance, of course, but, far away because work requirements are more flexible. I think you're going to see a lot more driving traffic back to the city. And I think that we're going to continue to see growth here in Charlotte specifically, just because of where we are and what we stand for in the grand scheme of business and development in this country. So I think it's going to be one of those things where you'll probably see an average about 5 to 7% over that period of time. And if you're looking to buy a home, that's a very respectable return on investment. I think it's, and I'll use the words that my boss Ferris always likes to say. Home ownership is one of those things where you get return on money you don't have, and like what he means by that is you could put 0% into a $400,000 home with a first-time home buyer benefit, right? So you didn't put any money down; all you did was pay closing costs. But your home, if it appreciates, any percentage, that's return on investment on money you didn't put in. So it's one of the very few, if only, utilities where you can generate that. And I think that's such a cool thing. So that's kind of my take on Charlotte. And for me specifically, my goals are going to continue to buy medium to long-term holds. And maybe one day I'll consolidate those, sell them as a portfolio, and maybe get into something a little bit bigger. But I think there's a lot to be said for the individual investor owning individual properties and creating that portfolio for themselves.
Awesome. Awesome. So Charlotte's recession proof and more Charlotte traffic. So the good news, bad news right there.
Yeah.
Um, but Ian, great having you on the podcast. Last question. Where can people get in contact with you if they're a first-time homeowner, investor looking to do a mortgage and work with you? Where is the best place to reach you?
Yeah, so I think most of traffic these days goes to Instagram to kind of find real estate professionals. So, I'm easily able to be found there at the CLT Mortgage Guy. You can also reach out to me at any time over my cell phone, which is 704-458-0526.
Perfect, Ian. Awesome. Well, I appreciate you willing to be a guest here on the podcast. So this is Ian and Chris on the Leadway Wealth Builders Podcast. We'll see you on the next one.